Hello, Scott, Andy.
Hey Scott, hey Steve, how's it going?
All right, good, good. Happy Tuesday, everybody. Thanks for showing up and hearing what we have to talk about, some prepared stuff and then some off-the-cuff stuff. We'll definitely keep it a little bit more looser this session. So if you do have any questions, feel free to send them through. We'll do our best to get to them. But as we get towards the end, we'll be more focused on questions. So if you really got one you don't want to make sure it doesn't get missed, yeah, maybe hold on to that one until the second half. Trade of the week is the normal Tuesday webinar, 5 p.m. Eastern, June 6th. And quick disclaimer, we always remind you guys that we are content publishers. We're not financial advisors. So please don't construe anything you see or hear on this presentation as financial advice pertaining to you. If you need something like that, you got to go to the RIAs and the brokers and the fiduciary guys that took all those tests. So again, thanks for showing up to our webinar, Trade of the Week. Typically we focus on the trade of the week, which we will get to. But before we do, just a constant reminder, especially for the new traders, Scott is going to give a promotion code at the end of this webinar. It's going to save you 15%. And the reason I bring that up is because when you try a first month of trade ideas, you don't see it on this slide, but I'll touch on it first this time. Essentially, you're qualified for a 1 full hour of one-on-one training, just you and us. We'll share our desktops with you, or we'll look at your desktop and help you set it up. But that value, that 1 hour is invaluable. People who want to come back and do another hour, they're charged $99. So the reason I brought that up, if you're thinking about kicking tires, you can get a great 15% discount on your first month. You can qualify for some training, and then after 30 days, you're really going to know, if this is a product that that is for you or not. We think it is, based on our subscriber growth. It just continues to be parabolic. So in topic on this slide, you're not alone with trade ideas. We do our best to really get you going. It's a comprehensive program. We understand that, and everybody uses it in different ways and fashions. So we try to make ourselves as accessible as possible with 4 webinars a week, Monday, Tuesday, Wednesday, Thursday at 5 p.m. Eastern. This is the Tuesday version, Trade of the Week. Monday was myself yesterday and Jamie. Tomorrow will be Dan, the CEO, and Brad, and they deal with more questions and answer and technology stuff. And then tomorrow, on Thursday, actually, will be the trading studio with Andy and Jamie riding shotguns. And I'll highlight your attention to this bottom bullet point here. We just added it. Our first Friday support session. It's a 3-hour webinar, just like you see right now. You basically click in, you use the questions box, and you have a 3-hour block every Friday, open to the public, open to subscribers, open to anybody to come on in and get your short list of questions answered in a timely and easy fashion. So keep an eye out on the email. If you're on the email list for other things at Trade Ideas, chances are you're going to see announcements that let you know that the Friday support sessions are forthcoming. So we had great feedback last Friday. A lot of people showed up. It took all 3 of us to man that questions box and keep people informed. So if you were not aware, Friday support sessions are now rounding out the entire week of onboarding you guys with trade ideas, and that doesn't even account for this graphic over here, the join the trading room. It's a free trading room. You do not have to be a user of Trade Ideas. It's for anybody. And we got anywhere from 400 to 500 people in there every single day watching Barry Anderson, who is the moderator, using Trade Ideas technology. And this room is really focused on finding trading opportunities. So it's like a trading chat room, but we like to call it the live trading room. And it's a great entree once again to seeing some of the features in action. So you're not alone with Trade Ideas when you join. Scott's going to give you a promo code, and that first month is really a whirlwind 30 days of getting up to speed and getting your learning curve going. Subscriber growth, as I mentioned earlier, continues to move higher, even beyond that slide, and of course I'm going to attribute it to the amount of attention that we try to give everybody, not to mention the incredible technology itself. Brokerage Plus, I'll just touch on this briefly. It's advanced only, late intermediate to advanced, beginning traders. put your fingers in your ears, don't listen. But this is auto trading designed to use scans and strategies that you're comfortable with that work and you use, and you can connect those directly to Interactive Brokers only. We'll be moving forward with new platforms later in the year, but we call it Brokerage Plus. Right now it's still in beta form. If you have any questions about it, you can email info@trade-ideas to get more information directly from the website tradeIdeas.com/beta. Again, we're still in the beta test on the auto trading, but I just want to remind it's not for newbies. It's really for people who have a grasp of what they're looking for trading and have some good custom scans that they use on their own. All right. Boom, here's our agenda for June 6th. Kind of light, don't have a whole lot of content, so we'll just try to keep this casual today. Market recap, a lot of stuff's happening. I've got some ideas that I want to convey of what I'm seeing in the market. Rather quiet day for Holly. Some observations, we'll go through some of the recap trades. The trade of the week, which is the title of this webinar, we'll look at this trade of the week, which was an unusual one. We'll talk about it and maybe even check in with last week's trade of the week. Just a quick reminder for people, we've got some cool new filters that a lot of people have been asking about. See, the way it works is the more people that ask about a particular filter or a scan, the more chance it's going to get higher up on the priorities list. So we did have something that was released, and I'll go ahead and quickly give you a demonstration of that. And then we'll just finish up, you know, with basic feature questions, your guys' questions, maybe even a couple charts if you guys want us to look at some charts and give you some ideas as maybe what our eyeballs are looking at on the charts. All right, let's minimize that. And let's go right into the market recap. Okay, a few things going on here. Last time we spoke, we had a holiday last Monday, so Tuesday was the first webinar that we had during the week of our webinar sessions. And I want to go back and revisit. Hopefully some of you that were in attendance recall, we were pretty much right here. And I had said, you know, this gap is just asking for a fill-in. It's a gap, number one, and number two, it just so happened to be the prior resistance that we broke out on. And sure enough, it didn't take more than the very next day, right on the open, a zing down, run the stops, and look at that. Just fill the gap, close the breakout right to a T, and then the way the market has been, the buyers stepped back in and closed the market higher with a nice bottoming tail, which set the stage for two more really nice upward movement days last week. Now I want to call your attention to what happened yesterday. Yesterday, after a big move, and I'll consider the move that basically bounced off of this trend line, all one continuation with a little bit of a pullback and then a push. Well, that's a pretty large move, but it culminated yesterday with this perfect doji, maybe 3 cents difference between open and close. Did the same thing yesterday in the Qs. Oops, how about 3 Qs, Steve? There's yesterday's doji perfectly in the Qs. Yesterday's doji perfectly in the diamonds. And I had mentioned that typically when you see a long move like this culminate with a day of rest, which is essentially what a doji day is, it's a day of rest, there was no winners. The buyers didn't win, the sellers didn't win, it was a stalemate. But often those can be continuation patterns or they can be possible reversal patterns. And I said pay attention to the high and the lows yesterday in yesterday's webinar with Jamie as to possible direction. Well, we had a kind of a nasty little gap down this morning, and we traded up basically through to yesterday's close and then a really ugly intraday close in the last part of the day. Whoops, if we just take a look at the intraday, here's the intraday mess we had in spiders, and the Qs were even worse. Qs just really gave it up, you know, and again, we're talking the Apples, we're talking the Googles, the big stocks that we've been talking about that make up the big 40% of the NASDAQ 100. You know, they were just having none of it here at the close. So really, really weak close. It's kind of raising a bit of a caution flag if I go back to the spiders because like I said yesterday, pay attention to the direction of the following day after we have a doji like this on a stalemate, which direction we're going. Well, we closed below it, we traded below it, we tried to come back up and kiss it midday and then quickly sold back off. So this to me is a bit of a bearish red flag. a long topping tail, which is the opposite of what we've seen before with these bottoming tails back here, back here, back here, where the buyers seem to show up at the end of the day. Well, in this case, it was the opposite. Sellers showed up at the end of the day and gave us a pretty weak close. And we haven't seen one of those in a while. Typically, we seem to close up with bidders and buyers. So, therefore, let's go back to the cues, typical doji for yesterday and then a really, really ugly close. So technically we are closed below that doji. We very well could see some additional downside movement in our indexes. We'll see. Now, I want to pull one thing up because it's kind of interesting what's happening at the same time. This is a daily chart going back, and I'm going to show you even a weekly chart. This has been a very strong trend line holding back the price of gold. Couldn't get above it back here. We got real close last month or 2 months ago, and then boom, big pullback. But here we are again, and now look at today. Today has also a doji in gold, but a giant overnight gap, a giant leap above the downtrend. And normally I don't do this, but I want you to see the weekly chart just so you can see the significance, okay? This is how far back. Here was our gold capitulation to the upside back in 2011. Drawing weekly charts here. These are weekly candles. Very, very demonstrated down trend line. And look what's happening here. We're starting to break through it. So this is interesting. In addition to some of the weakness we got today, we're kind of at an inflection point on gold. If gold continues to move higher and these stocks continue to have weak closes, maybe we're in for some winds of change. I don't know, but I felt it was worth it to at least show you that gold chart. I've been watching that for a while. That's been a very significant downtrend channel that looks like it's starting to get broken. We'll see if that continues. And then on the IWM front, I just keep laughing at this chart because it doesn't want to do anything. Didn't get a doji yesterday. It got a red candle, and today it basically closed back down into this secondary basement level, we'll call it. We've had these lines drawn for a while where this might have been a possible doorway to breaking out, but we never really can seem to spend too much time in there, so we're dropping right back into the range there. But I think it's very significant. Looking at that. Again, that very well-defined doji yesterday, and I said yesterday it can be one of two things. It can be a continuation pattern or it can be a possible reversal pattern. Well, today it was the first step of showing a possible reversal. We'll see what happens, but this was not a healthy close, guys, and it was interesting once again to see the sellers coming in and hitting the big five companies that make up 40% of the NASDAQ. Big ugly close on the NASDAQ. So that's what I got for you. Anything you want to add, Mr. Andy?
Well, I think when you do have a situation like this where you possibly could be having a reversal, the prudent trader always maybe get ahead of the game and look to where you might have levels of support where it may want to trade down to. I can see a nice little level there around 242 on the spiders that was the breakout area. So. It's kind of like when Steve showed you the gap filled right there. It's so much better and can be much more profitable when you know this and you're proactive instead of looking at it later and say, wow, look at there, it filled the gap. And if you're looking at where stocks may go, maybe you throw some bids in, at least put some alerts. Use our incredible price alerts to put areas, mark them up now, so when they go off, you'll say, that's why I stuck that there, and because it's always good to keep an eye on the overall trend of the major indices for sure, and levels of support and resist them, and go ahead and mark them up and put price alerts in them, so that way you're ahead of the game. You're not just looking at stuff hindsight.
I just did so at that level we saw there, as a matter of fact, just to kind of nudge me if it does happen. All right, cool. So. Again, I'm really curious to watch that gold, and yes, somebody made a good point. The GDXs were just on fire today. Quite honestly, going into the weekend, I didn't see any gold miners on our scans, and so kind of left them to be, but we'll get back to the trade of the week in a second. Right now, we're going to talk about what happened today in Holly. And it was very similar to yesterday. If I go back and put the spiders on, there's today, and then there's yesterday. Up, down, up, down, up, down, creating that doji going nowhere. Well, we gapped below the doji today, came back up, spiked through yesterday's lows, pulled back, spiked through yesterday's lows again, pulled back, spiked all the way up to unchanged, maybe a penny or so to the good, and that was it. And then it was just a waterfall into the last hour of the day. So these are the kind of days where we talk about risk on, risk off. Well, this was not a statistically probable day where higher tides are lifting all boats and we're having a broad-based type rally. This is what we call a noisy statistical day. So if I go down here to the risk on, risk off histogram, risk off is exiting quickly, taking Holly's exits throughout the day, not sticking around till the end of the day. And then when we go to risk off, it's the same thing we had yesterday. If you guys tuned in yesterday, we had a histogram that was just back and forth, red, green, red, green, red, green. And what happens is these risk on histograms, they kind of start to follow the market in general, you know, for the most part. So if we've got a lot of back and forth choppiness, you're probably not going to have a very good risk on type of day. So, you know, for the most part, second day in a row, same as yesterday, getting in, getting out was the order of the day, quick hits. You know, somebody asked, what's the average Holly trades? And I kind of came up with a number on my own. Maybe you'll agree with me, Andy, but it always seems to be somewhere between like 10 and 30. Something like that. And so looking at the trades today, we only had 13, so kind of on the light end of a typical Holly day. Not too many trades. One thing I do want to point out, though, I thought was interesting, and I even tweeted this, so for those of you who follow my Twitter account, you may have seen this. Let me back up. I'm going to use this special. There we go. So at one point today, we had this thing going on right here. And for those of you who follow me, that is the horseshoe down setup. And it's fractal. It can happen on a daily chart. I like to see it on 15-minute charts. But I had made a tweet early in the morning. I said, you know, we had a gap down. Of course, the buyers stepped in. They got right to yesterday's lows and started to roll back over. This is the beginnings of what I would call a horseshoe down. A gap down, a failure to fill the gap, and then a roll back over in the direction of the gap. Well, the market got kind of goofy and popped back up, but in the long run, that really was the order of the day, so extremely statistically noisy. Now, the reason I prefaced that is one of the first trades that came out today was a short. No fear short here. Let's take a look at this. Let's take a look at this alert here. So this is a momentum, kind of a downward strategy. It's not fading bounces. It's one of the reasons it says no fear. No fear, just pile on the bid and short here and hope for some momentum. Well, this down, actually, this down movement started to really occur right about the same time as we had that S&P starting to roll over. I think this candle right here is exactly where that stock was really starting to catch fire. And then basically the market just kind of stopped it in its tracks and it had nowhere to go but kind of bounced back up. But some real nice movement on the open. First trade of the day, and coming off, as I said, that shape right there. When you see that shape, typically those don't end well, but in this case, it took all day to really not quite end well with a lot of noise in between. So yeah, again, being nimble was the order of the day when we have reversals like that. But I found it interesting that there was a nice short sell that triggered, as it should have, in my opinion, when it should have. Basically, once again, right about there is when that short sell triggered. The market was starting to look weak and roll over. Did you want to add something to that one, or?
No, I remember when it went off. It looked like a really nice setup there, man. And I've seen this a lot, guys. And like Steve mentioned the other day in a webinar, I think you're going to really see you know, some of these shorts shining. There's some really good short strategies, you know, in our repertoire here with Holly in her that she puts to the combine, you know. So we're seeing more and more appear each day, which kind of tells you that you know, maybe something's on the brink and start to happen here. And I'm looking forward, as Steve is, if we do, it's not if, it's when we do get into a bear market, you know, which if these shorts really start to work, and I anticipate that they will.
Yeah, I don't know. Maybe it was yesterday or last week, but I am looking forward, like Andy said, for when the market does turn and buying the dips no longer works. That's when I'm really rubbing my hands together that I feel Holly is going to create some additional value and showing us what does work after 3 or 4 or 5 years of conditioning of buying the dip. It gets real hard for us to flip our minds upside down and start fading stuff that's popping up on green bars. Well, Holly has been doing a good job recently of doing what we call those fade shorts, where the price action moves up and then Holly jumps into a short trade, much like, and we can just segue into Cowan here, the quarterback. The quarterback strategy is basically pulling back 25% off of a nice upward push and a move. Well, we can see right here, this was probably our upward push move to the top of the candle, 25% pullback, and there was our entry right there, that blue tag. And real quick, some of you probably noticing, I'm working on the newest, latest developers beta version. So we've got a lot more data here on the right-hand side. The stop, STP, is called out. AI, the blue, that's the entry. And the target is way above. We can't see that, but we're adding more and more ideas to the charts, and here's another one to look at. Okay, this is one that's been long overdue. Let me go to my chart here. The arrow for short sales are no longer pointing upwards, they're pointing downwards. That was something that was a feature request that was asked by many, and makes it much easier on the brain and the eyes to see, the arrow is pointing downward. We're trying to go down, whereas before we were pointing up on the arrow. So the focus is on making the charts better. There's more to come. But yeah, going back to the Cowan entry, again, pullback entries I find very interesting with the AI. It's not always the kind of thing our brain or our eyeballs want to do or follow suit, but the AI is a nice little nudge sometimes to let us know when there can be a decent entry, whether it's fading an up move for a short sell or buying on the pullback for a strong move upward. And I think you had a couple of ideas on this trade or not. Did you want
Well, yeah, no, I love that trade. And there's a situation too, guys, on the pullback where Holly, it was 25% pullback and we got it at 15.75 where it actually went lower. So because I hear some people sometimes complaining that they can't get the price. Well, this is a case where you could have gotten even a better price. You can see there it dipped down below 15.70. Very strong. I love the daily there. You can see the daily breaking out of the prior 3-day high there. That's a nice little area of a little bit higher, Steve.
No.
Nope. See the daily highs there in those two?
Yeah, right there.
Right there where the blue line is. Yeah, exactly. So you had a breakout above that 3-day high there. So really no resistance until you got to the 16 level in which you went to. Trust your chart. Find areas, you look left and find areas where it may run into resistance, and those are a lot of times good targets. So not a huge trade, but a nice nice 25-cent no pain trade there. Very valuable.
Another interesting thing happened today is we had NBEV show up on 2 different strategies. Let's see, NBEV on the wake-up call looks like it got it a little bit earlier at 68.48. Now, we always say, let's look at our daily chart first. This thing did move higher throughout the day, had a nice breakout, and then it basically pulled back. So once again, kind of in the same vein as to the way it was working today, risk off. Holly was able to pull 20 cents out of it or so before it rolled back over and finished the day a bit lower. Same stock, NBEV, also on the Alpha Predator, but it was a little bit of a later alert. So just kind of interesting when you see the same stock on 2 different strategies. Wake Up Call seemed to have found that one earlier, but again, same chart, same thing. Stock broke out and then had a little bit of nice alpha movement and then pulled back and finished negative on the day. Lastly,
let me add some color to that, because those are both just incredible trades, and the reason they are, guys, is when you enter that trade and go back to the last, even the last one, which was 84, I believe, the price of the. I mean, basically, you're entering at the low of that move. I mean, it's moving higher. Okay, you're buying that stock, and basically that's is that a 15-minute chart on your right?
Mm-hmm. Yes.
I mean, yeah. So you don't go flat until that trade, just plenty opportunity for alpha there. You know, when it's high as 720, yeah, it finished lower than the intraday, but the market also rolled over. But the point I'm making is it's not an entry where you get in and have to suffer a 10 or 15 cent pullback, jigging back and forth. No, you get immediate results and immediate alpha and immediate opportunity to profit from a trade like that. In both cases, even the one that chased a little bit higher is still went higher after that.
Risk off was the order of the day right here. You can tell throughout the day it was pretty much the same. Risk on tried to come back towards the end of the day, but for the most part of the day, risk off was shining glowingly, saying this is the way to go today. Take your profits quick and run. Just wanted to quickly highlight the risk off category. That the most Holly gave away today was 15 cents. So as usual, you know, just let me repeat this. There's 4 trades outcomes in this business. You got big winners, big losers, small winners, small losers. What you're never, ever, ever going to see Holly take is a big loser. That is the first recipe for blowing up an account, and one of the biggest mistakes that newer traders make is, for whatever reason, getting stubborn and then booking a big loser. You can take paper cuts all day long, but knowing that that bigger trade is right around the corner. And so once again, you know, risk off, Holly demonstrates, you know, a 15-cent loser was the biggest risk downside of the day of what came through today. So anything else we want to add here?
Yeah, if you'll sort by entry time, I really want to throw this out there so you guys, as we talk about sector, keep an eye on the sector analysis, knowing which sectors are hot and which ones are cold. Well, you'll see today that Holly took a short at 729 OIS, and that'd be that's Steve's time. That's 729 Pacific. Okay, and if you look at the daily there, that was shaping up to be a beautiful chart. Very ugly daily chart pattern, bleeding down. Look at that, just a death march, I like to call something like that. What looked like to be a very good trade, Holly took it. You can see her entry there, and then after, about 20 minutes of just sideward gyration, she finally said, you know what, this is not doing what it's supposed to do. She exited for a flat, and as you can see there, the stock went higher. Well, if you were keeping your eyes on the sector, you would have known that oil was the lowest sector on the board. It gapped down today in this trade, and it started bouncing. For whatever reason, oil decided to bounce, and this trade did not work. Well, kind of turn around about 20 minutes later, and Holly throws out this trade right here, another energy play. Okay. Long. This time she goes long. Well, if you're watching the sector, and just quickly put up, you know, you can USO right there, or real quick if you want to, Steve. And
USO.
Yeah, just you can see USO kind of gap down. He's not. It's probably a bad example because it doesn't show much of a gap down, but anyway, because this thing is so deep value, a big move is like 20 cents in this thing now. But anyway, oil gap down, and it did not go any lower, and it started going higher. Okay, so getting back to our trade on, sorry, Steve, to get you flipping back and forth here. SWNC. So Holly gets out of this one for a 2-cent loser on reduced risk. Okay, I think the biggest pain was about 10 cents. But if you're monitoring what's going on in the oil sector, and we'll talk about our trade of the week, TOT, here in a minute, which is also in that sector, and we barely got stopped out, unfortunately, but we were noticing that was bouncing too. Exxon actually took off pretty quick. Yeah, he can pull that up for you and show you there on the daily real quick. Just flip over, you don't have to make it bigger, just there's Exxon right there. So obviously a big integrated oil company. And so going back to, you keep making that chart big, so you can go back to our other trade, but you don't need to enlarge that daily. It's making it hard for you to find our trade. There we go. I'm making it hard on Steve there. Sorry about that, buddy. But nonetheless, this is one where Holly gets out for a 2-cent loser, maybe goes 10 cents against us, and then very nice bounce. So even if you did exit, this could be a beautiful trade around, because if you're watching the oil sector, you can see the oil stocks are bouncing. And this was just one, guys. I'm just pointing this out. Once you see that first one, that oil stock that does not work, and then you see this later coming out as a long, and you see Holly exit for reduced risk, it's one you might want to hold on to and put this one on the daily as well, Steve, and I'm going to show you why. Because if you're watching this, and even if you do get out with Holly and you see that bar reversal right there on the daily, I mean, this is just a beaten up oil stock. The sector is bouncing. You hadn't had a bar reversal in about 8 days or 9 days in this thing. And you can see there, nice volume today, relative volume, and broke out above yesterday's high and had a nice move. I just want to kind of show you how you can keep an eye. You can mark up some of Holly's trades, keep an eye on them. Because last Thursday we had one very similar to this. It was a very incredible trade, and I mentioned, you know, I don't like catching falling knives, but I don't mind actually doing a little bottom fishing when everything lines up. That one was one that was lining up. You had several days of sell-off in a row. You had a very strong sector recovering from the lows of the day and moving up just behind GDX on the sector watch list, and that's the kind of stuff you kind of keep your eye on there, Steve. Sector watch list, and you can see there. I don't know what's going on with this sector watch list. Mine doesn't look like that. What's that, XLK? And oh, that's the that's okay. That's the highs and lows.
Right.
Right.
Yeah, you couldn't beat gold today, but oil service definitely moved up.
Yep.
U.S. the
Moved
oil,
up. Yep.
and oil service and energy, these three.
Mm-hmm.
All right, which is probably a great segue to the trade of the week. So let's just jump right into the trade of the week. What happened here? Kind of unusual this week. Sometimes it's very important to read through the context of the emails that come through, because sometimes we have a conditional trade where there's a trigger, and sometimes we just say the trade is active at the open. We decided not to. This is the bar we were working with here, and again, I don't have the scan pulled up, but if you have the email, it's a scan that pulls back to the 50-day moving average, and this wick right off this candle on that green line right there was bouncing right off the 50-day moving average. The markets in general going into the weekend were pretty overbought. They were extending through a lot of Bollinger Bands. So we decided to try and focus on some trade ideas, technology scans that maybe would give us a really safe entry, very conservative stop loss, rather than buying something that was a high flyer and suffer a big pullback, because that can happen. So a couple things going on here, which was kind of interesting. We made it a non-conditional trade. We made the trade on the open, and what happened was the trade, you know, we anticipated the trade to open up around, you know, 52.22 or so, and our stop loss was going to be down here at 51.40. Let me just quickly talk about the stop loss level. The stop loss level, this orange bar, this orange line comes right across that candle, and this was still kind of an open gap that was still there and still available. And we knew there was a possibility it may try and tickle it or whatever, but we're using such a pullback of 9 or 10 days as our bounce entry here that we wanted to put the stop significantly below the gap, you know, and yesterday, interestingly enough, it went down to 3 cents above 40. It's what almost got stopped out yesterday. And really surprised that with ExxonMobil gapping, not gapping down, and some of the other stocks in the same vein, not gapping down as much. Jeez, my fat fingers. Oh my gosh. It was really interesting that
Yes.
this oil service just had to go down and take out the stops on the open. Now, let me just put this in context here quick before I deliver my conspiracy theory. First off, the open yesterday was basically 51.71, 72, something like that. So we were only 30 cents away from our stop price. So, you know, in my mind, this was pretty much a free look type of trade. Risking 30 cents on a $52 stock is about 0.5%. And for the most part, we survived yesterday because we put the stop deep enough under the gap fill, and it didn't quite get it yesterday. Now the conspiracy theory. You know, why did this one have to gap down when the others didn't? Well, I don't know. Maybe the trade of the week is starting to take on a bigger following, and people are taking the trade of the weeks and they're putting in their stop loss orders down there at the level suggested. Well, this may be news to some of you guys, but your brokers are selling you all out. Not only do they sell your market orders and your limit orders, but they're selling you out on your stop loss orders as well. So the bigger market makers, the Citadels, the Virtues, they kind of have a different view of the chessboard. And I think what may have happened is, I'm not saying this is what happened, but it's just quite possible that the trade of the week is getting kind of popular, and stops were run right on the open this morning.
Mm-hmm.
And I will add, when Andy and I were running the Ditto Trade account for 3.5 years, we were trading other people's money attached to every single button push that we had. And we started to notice that a lot of stop out hunts were happening in the first half hour of the day. And so a lot of times we would pull our stop and manage the trade manually. And that could have been done here. It's no fun to have to do that. It only went down 10 cents below the open. But, you know, maybe there's somebody out there who noticed what happened and saw it pop right back up and maybe took a position playing on the pain of those stopping out. I don't know. But this is just a classic example of how, again, big winners, big losers, small winners. All we did was take a very small loser here.
Mm-hmm.
You know, it was literally 0.5, 0.5% on the stop out. So yesterday's gap down gave us all a little bit of a better entry price and gave us a tighter window. But you know, 30 cents is not going to it's not going to blow up anybody's account. However, Andy and I throughout the day were exchanging extreme frustration on the back channel at how it just had to go down there and tickle that level and then bounce back up midday. So it is what it is. The trade of the week was written out. It was stopped out for a 0.5% loser, but I really wanted to kind of go over some of the wisdom with you, why we picked it, how it gapped down yesterday. In hindsight, you know, maybe putting a conditional trade above that candle may have been the call. For whatever reason, we didn't do it. But there it is, you know, 30-cent loser, just a paper cut. Let me go to Chegg before I bring up a couple other things. This was the trade of the week last week. We finally got our move higher off of the big short squeeze, and we've just been kind of chopping around back and forth. But the good news is we have not posted a close back below this breakout. Now I want to show you guys something. It's right here at 12 on this day, right here. I'm gonna draw that line because I've got a screenshot for you. A lot of you guys know I love to use my single stock window. And single stock window, one of the things I'm constantly looking at is the volume in the 5-minute volume candle. Is there volume coming in, or is it a sleepy 5-minute candle period? I'm also looking at the relative volume. So this is what Chegg looked like today. But I just so happened to screenshot an example of what's going on when things are really push comes to shove. So here's this $12 level you guys can see for an hour was very solid on that big green day that I was just showing you. This is this day right here, okay? A lot of chop, a little bit of back and forth. Here's the hiccup before the big move. Sometimes you'll see a little pullback before the actual move, but look at what I wanted to show you. As this stock was breaking above 12 and it moved very quickly, my 5-minute volume was showing exactly what we want to see at levels of inflection, just like this. If this volume 5 minutes was showing 24%, you know, and if I had not taken a position, I probably wouldn't be inclined to maybe push the button and buy a position. But if you're watching and stalking a level like this and you see that level start to push through with giant 424% on the screenshot, that's the kind of stuff we want to see. That's the secret sauce that Trade Ideas can offer to give you guys a little bit of extra insight as to what's going on underneath the scene. So that's why I like to use the 5-minute, and I've got that volume right up there tucked under my relative volume so I can quickly see if the stock's making new highs. This is where my eye is going. Volume 5 minutes, I'd like to see 200, 300, 400% or even better. If it's something under 100%, it's probably better off to just leave it low and it's just kind of doing its thing.
Mm-hmm.
So one more thing on the trade of the week. There's been a lot of trade of the weeks. We're almost halfway into the year. I think two of the quickest ones that were exited were SDS a couple months ago, and then basically this TOT today. But I want to show you guys something. This is off my proprietary spreadsheet, and this particular column is basically showing the max profit going back to day one. SBGL coming out of the January blocks at the beginning of the year. At one point, the zenith was 46%. True Cars is still up right around 37% as we speak. FCX did get stopped out along with GoPro, but they were over 10% at one point. All right, so this is not a bad column to show you that there was alpha generated in the right direction, at least for a certain amount of time. Here's our little TOT. Basically only got up 0.27% yesterday before getting stopped out at negative 0.5%. But the point is, on some of these squares I've got in red, and if you want to read more about it on the next trade of the week, you know, one of the assumptions is you really don't want a lot of stock that's above 10%. Give back more than 20%. You know, you want to take it off while you can. You want to, you know, sow some of the seeds you've planted while they're up. Just because there's a profit target in there that might be higher, there's no reason to not take a little bit off. And so what we've been saying is on a lot of these assumptions, if these trades get up over 10%, please don't let them pull back more than 20% before taking some profits, if not all, or at least a good half of them to lock something in. So this is really updated as of today. This is the zenith. This is every single trade of the week that came out. Oracle and Juniper never triggered. But at one point, all of these trades were up at least this month. The other bad one was SDS. It was only at 0.89. And then I think it wound up finishing down. Gosh, let me just see here. SDS wound up finishing down, where'd it go? About 1.48%. So that wasn't a real big loser either. So, you know, the point is take your profits while you got them. You know, it's nice to see Weight Watchers up 113%. It's lovely to see Square just killing it again today, up 37%, moving higher. TrueCar, INFN, these are some great zenith type movements of alpha. And, you know, you should be taking some off as you can, and especially the ones once they get above 10%, please don't let them fall back more than 20%. We call that the 20% rule, and that's something Andy and I have used for years, going all the way back to the day trading days where, all right, if I'm up $1,000, that's it. If I pull back to 800, I'm done for the day. I'm going to get up and go to my car and drive away. You know, we've been using that type of trading psychology mentality for years. All right.
Hey,
yep.
Steve, yeah, Fred would like for us to go over also WETF and SPWH real quickly, since they are.
Well, WETF, last we spoke, I was really hoping that this thing would come up and challenge, and it did. Unfortunately, it did a reversal on us, and now it's down in here very much close to filling the gap. I don't know how much lower this thing could go. It very well could come and close that gap. But at this point, let me just say this. The fact that this move right here, breaking above prior resistance, did not follow through, and the fact that it had a big short float is concerning. So if you're in this stock, it might be time to really tighten up your stop. I don't like the way that failed. There's nothing that couldn't say that we came and filled close enough of the gap and we could move back higher, but considering what's happening in the market right now, I'm starting to get a little jittery. I don't like the way it reversed after not breaking out and following through. Typically, these short float stocks, once they get through their resistance level, you know, they've been following through, like your Squares, like your Wayfairs. I think Ollie, I don't know what Ollie was doing. Ollie's pulled back a little bit, but these are all stocks that they broke through with nice short squeezes, and then they pulled back. The second one was a SPWH, and wow, okay. I do like this candle. Yeah. I do like today's candle, the way they closed it. I had said previously that this day before it bounced, we could come down and we could try and touch something of that prior resistance. These two candles here got really close to it today, and I like the way we closed. So I'll tell you what, I probably wouldn't let it go much more lower than the bottom of today's wick. If we start to get into a bear, no, I'm not saying we're getting into a bear market, but if we start to get into more selling tomorrow and the next day, it's going to be harder and harder for some of these charts to hold up. So I probably wouldn't want to let it go any lower than that wick of today's lows. Okay, which is a great segue for float. Joseph asks, what is float and why is it important? Well, there's two components there. The float is the actual amount of shares in circulation. So in this case, Joseph, the float is 40 million. That's rather on the small side. Anything under 10 million is considered extremely low float. A lot of stocks are above 100 million, and then of course your big caps, IBMs and stuff like that, you can get much higher, even into the billions in some cases. So that's the amount of shares in circulation. What's interesting is to match the short float. So 26.29% of the 40 million are being held by short sellers. And so if they get to a situation where the price keeps getting away from them and they're losing money, they're going to have to buy to get out, and buying to cover, begets more buying and creates a perfect storm of buying alongside the longs. So I guess, SPWH, wet F, starting to see, let me just go back and show you here, what's been working. Price alerts, what's been working? Square, Weight Watchers, W, 52-week high short squeezes. Well, the last two we've just looked at are starting to fail. So it might be the case that the short squeeze game might be softening up a little bit here. We'll see what happens. Hang on a second. Did you have anything you wanted to add?
No, I agree with those. I mean, honestly, with WETF and SPWH, they're marginal. They're down marginally right now, so I don't think it's anything to fear. But I agree, you don't want it too much lower, especially that breaking back down through the breakout range. For
Follow-up
sure.
question from Armando. How do you guys use the float as a strategy? Okay, well, Armando, here's a great example. This is one that I've used called Squeeze Me. This is every stock that has at least 25% short the float. I'm sorting by the float percentage here. And as you'll notice, the column right next to it is the total shares. Okay, this is where it gets interesting. This W is Wayfair, and there's 37 million shares in circulation being traded, not very many. 45% of those are being held by short sellers. And those short sellers are the most stubborn bunch I've ever seen, because this is all-time highs here, all right? If you're a short seller and you're not covering and getting out of your position as the stock continues to make all-time high, all-time high, all-time, it's made 4 all-time highs in the last 4 days. And if you're still not getting out, well, that can be an opportunity for people who want to exploit that short squeeze, which is a painful squeezing, for lack of a better word, of the shorts to force them out of their trade due to pain and loss. So that's a wonderful example right there, comparing the short float percentage to the actual amount of shares in the circulation. Weight Watchers, kind of a similar story, and as you can see, I've got a working alert. This is how, to sum up your question perfectly here, Armando, how would you guys use this float as a strategy? Check number 1, Trade Ideas has identified a possible candidate. Check number 2, the chart. Buying right here would be just buying in no man's land. Nothing's happening. We could roll over and just, have a horrible loss. But look at this red dashed line right there. That red dashed line is an active price alert. 1, 2, 3, 4, 5 days of resistance. If Weight Watchers still wants to go higher and test the short sellers, this alert is going to trigger in real time. It's going to pop up like that and say, W has triggered, gone higher, what do you want to do with it? And that's when the discretionary trader decides, what's the market doing, what's the sector doing? Do I want to log into my account and trade this long, or do I want to let it go? So hopefully that's a great, I think that was a great answer to your question.
You got a couple asking for Squeeze Me.
Yeah, let's do that. So what I'll do, and again, just so you guys know, let me just show you something real quick, because I always like to do this. It really, the visualization is worth it. So I took off one filter, and what this did is it turned Squeeze Me into just a giant list of everything that's 25% short the float or higher. A lot of stuff in here. Too much stuff, as a matter of fact. Start looking at random charts, downtrend, downtrend. That's not interesting. What's interesting, like I said, are the people who are stubborn in holding shorts through 52-week highs, or even worse, all-time highs. So if I go back to my configure, how I whittle that list down is I use position and year range. And I'll give you guys this, but I just want you to understand what you're seeing here. 0 equals a 52-week low for all these stocks, and 100 equals the 52-week high for all of these stocks. So if we go in and use a minimum value of 95%, now we can click OK and see who's swimming naked here if the tide goes out. It's just a handful of these stocks. They're all very close to the 52-week highs. Oh, look, there's our friend Chegg. We found CHGG off of this list 2 weeks ago. So there's some good stuff on here. Happy to share. Right-click, save and share. I will drop it into the GoToWebinar chat window. So just look for the floating menu on the GoToWebinar. Click the little triangle next to chat, and I just dropped the cloud link in there. And as I will always do for those that don't know what to do with that cloud link, if you click on it, it takes you to this page. All you got to do is just load the code, copy. Once it's copied to your clipboard, Trade Ideas is ready to load. There it is right there. We load a duplicate copy. So that's all you guys got to do to have a working copy of it. I suggest once you get it, you right-click it and you save it to cloud. Otherwise, if you forget to save it, you'll be asking for it again. So it's always a good idea to right-click and just throw it into your cloud and save it so it's always there. All right.
Doug, we don't really get into brokers here. I mean, we do link with most brokers, including you were asking about Fidelity, including Fidelity. I think it's important. You need to ask yourself, you know, the trader, and if you're going to be pretty active, you need to find a broker that has a per share commission rate versus a per trade commission rate. That's going to save you a lot of money in commissions. So I know IB does have a per share commission rate, and there's several others out there that do, but that's what you want to focus on.
All right, 2 more questions, and then we're going to lock it up, so please don't send any more questions. The first one is a great one. Josh is asking me, look, I've got my Squeeze 52, which, by the way, I will happily share. This is taking it to the next step. This is not a watch list. This is actually stocks that are moving to all-time 50 or to 52-week highs with a high short float. And I just dropped that in the chat window as well. But it's a great question, and I'm glad you asked it. He says, why did nothing come through today on the Squeeze 52? And here's the answer, Josh. I've got what I call a market filter in there. So on days when the S&P is down, you're not going to see any alerts. And there it is right there. There's your culprit. S&P change today, 0. Let's check our work and see what that means. It means the S&P was up since the previous close. I'm shaking my head. No, we did not have that today. The S&P was flat since yesterday's close. No, we didn't have that either. We had it for maybe 2 seconds. But this is the reason why you're never going to see something come through that alert unless the S&P is up on the day. So hopefully that makes sense as to why you didn't see anything on that Squeeze 52 alert today. There's a lot of checks and balances in there. And lastly, somebody asked about the Pandora chart. Let's expand this thing out here. Pandora's been having a rough time.
Mm-hmm.
You know, matter of fact, just going back here to these levels, I mean, I wouldn't be surprised. Look, when we always say look left, you know, look for where the conjunction, where it bounced last time. It bounced there. It traded through there, but closed right about there. You know, you could be looking at 854 as the next stop. I don't know if you're short or long, but is P a good entry point?
And I wouldn't be a bit surprised. I wouldn't be a bit surprised that they don't take this thing down all the way to 8. Take out that low back in last year. You know, around $8, and you know, you could be looking at that. It's just that's once again, it's a death march. And
you're in another one. Now, good question. Somebody's saying, and rightfully so, that the stock has a high short float, and it does. The problem is the chart looks like crap. On this one, Pandora's got 29% short the float with a chart like this. Well, Wayfair has 45% short with a chart like that. Which one do you want? So that's how I like to focus on where the short floats are. You know, if a short float's in a death march like Pandora is, it's probably got a high short float for a reason, and they're in control right now. But in a stock like Wayfair, the sellers are not in control. Same with Square. They are not in control. Square's got, where's Square? Short float. Short float's coming down.
I noticed that today.
We just had an update.
Everybody's covering.
Yeah. All from here to here was probably nothing but short squeeze covering, because it was much higher. And for those that don't know, the brokerages have to report twice a month to the SEC. So basically the short float percentage is not dynamic. It doesn't change throughout the day. It changes every 2 weeks. And sometimes Yahoo Finance might have a little something different than NASDAQ, and they might have something a little different than other sites. But for the most part, you're only going to get updates every 2 weeks. So interesting that the short growth or the short float really dried up. Yeah, every 2 weeks, Alex, is when the shorts float is going to be updated, and that's news to me. So Square might be starting to run out of short squeeze fuel, but that's really what fueled it. So hopefully that answered your question on Pandora. It's not a great looking chart, and just because it's got a short float, it's not a reason for it to turn on a dime and go back up. That's the reason why I took that squeeze me chart that I shared with you guys and culled out the 95% of the stocks that are not close to a 52-week high. This is the kind of stuff that we want to focus on. All right. All right, good session, guys. Thanks very much. I'm going to turn it back over to Scott now, and he's going to tell you how to save on some promo codes, and hopefully we'll see you all in maybe a one-on-one session, some of you new users.
Yeah, thank you for the great presentation. We do have a code to give out, but before I just wanted to remind everyone we have a podcast. You should subscribe. The last one on Friday was actually really popular. Check it out. So search for Trade Ideas Podcast in your favorite app to find it. Subscribe. Listen to the most recent. Stay tuned for this Friday's. It'll come out a little while after the close on Friday. We do have a code. It's a new one, Sunny, because it's summertime, all caps, just like you see it on the screen there, or you can download a handout in the handouts panel that I'll pop in there momentarily. And the code is good for 15% off your first month or year of Trade Ideas. And it's also good for Standard. Standard includes, just like Premium, a full hour of one-on-one training with Steve, Andy, Jamie, one of our educators. So it's a fantastic deal. Just go ahead and use Sunny, all caps, to subscribe, and you can grab that handout from the handouts panel now. Just expand the little plus or arrow next to where it says handouts, and you can get that. That'll remind you of this and our podcast, and it includes our contact information. Email info@trade-ideas.com if you have any questions. That goes directly into our help desk software for routing to the correct team member. You can reach out to Steve directly, Steve at, Andy is Andy at. Facebook.com/TradeIdeasPro is where to go on Facebook to find us. Like our page there so you can share what we post. We post some different things there now and then. And you can follow Steve at Today Trader on Twitter. Dan Merkin is at TradeIdeas1. Thanks everyone for attending. We'll have a recording of this out later on tonight, and you'll get an email to your email address as the follow-up. Thank you, Steve. Thanks, Andy.
Thanks, Scott. Thanks, everybody.
Thanks for the comments coming in. Appreciate it.
See you all in
All right.
Q&A demo webinar. Bye.